All right, so veterans get the biggest gift in the mortgage world, okay? They get what is called a IRRRL, or a interest rate reduction refinance loan. It's a streamlined loan offered through the VA. These are very simple. We can close them in as little as 8 days. Very little work has to be done. Basically, the way these work is this. You're gonna take out a new loan, take out a fixed loan product, then your loan rate on your new loan has to decrease by at least 0.5% compared to the old loan. And then if you're going to move from a fixed rate to an adjustable rate mortgage, then your new loan rate has to drop by at least 2% from your last rate. Then there is a fee recoupment test on these loans that has to be met. Okay, so the savings from the reduced payment on your new loan has to offset the closing cost, more than cover all of the closing costs that were paid on the refinance within the first 36 months of you being in the new loan. The best part about it is that it's a non-credit qualifying loan, meaning not have to go through the whole rigmarole as you usually would with a typical loan. No credit pull is required. Appraisal is not going to be needed on one of these VA loans. You could even be able to skip having to show bank statements, all that stuff. It's just super simple. In terms of closing cost fees for these, there's really no appraisal. You pay a reduced round of government and title fees, and then there is a 0.5 point funding fee charged to you by the VA. So 0.5 point, let's say on a $400,000 loan, which is a $2,000 closing cost fee. Now, they wrap all these closing costs into the new loan for you if you want. You don't have to pay them out of pocket. Almost everybody does wrap those in. But that funding fee, if you have any percentage of disability given to you by the VA, then there's a good chance you'd waive that funding fee. Another couple things on this loan, you don't have to be living in that home anymore to get the primary or owner occupied rate. Okay, remember, investment and second home loan rates are higher than the rates that you get on a home if you're living in it full time. Another thing is that you can't refinance the loan right away, okay? You've got to wait until you've made at least 6 on-time payments on the purchase loan, the old one, and also make sure that it's been at least 210 days since that loan's closing. But guys, this thing is awesome for vets, okay? Everyone else's refinances have to go through a much longer process. They vet you all over again on your credit score, income, and assets. But if you have other questions about it, I would totally understand. Write them in the comments or shoot me a text and an email. And look forward to hearing from you soon. Thank you.